Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we are diving into a report that sounds like it could be about buying a house, but is actually about some very important bank stuff. Get ready for another wild ride through the world of finance reports. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we can talk about things together. We're looking into a report filed by the Federal Home Loan Bank of Dallas on June 30, 2025. This document's called a Form 8K or a contrafort. Companies use these to tell the Securities and Exchange Commission, the SEC, about big important events happening in the company. This report is all about the bank creating what is called a direct financial obligation. In regular words, it means the bank is taking on debt. Specifically, it's about something called consolidated obligations, which are like giant IOUs the bank sells. These obligations involve multiple federal home loan banks coming together, making them jointly responsible for paying it back. Think of it like a group of friends, all promising to help pay for a pizza, just on a much larger scale. It's important to know that these consolidated obligations are only backed or supported by the banks themselves and are not guaranteed by the United States government. So the banks better have the money. Now let's jump to the exciting part. Schedule A, which outlines the schedule of consolidated obligation bonds. Basically, it's a table that tells us when the bank promised to pay back money it borrowed. Looking quickly at Schedule A, we see two entries, both from June 30, 25, which is the filing date. The first one has a CUSEP number, which is similar to an ID of 313D2226, the coupon 52. They'll start paying it on January 15, 2022. They'll start paying it on January 15, 2020 interest rate. Is 5.15.2, they'll start paying it on January 15, 2022. They'll start paying it on January 15, 2022. They'll start paying it on January 15, 2026. The coupon rate, which defines the interest rate, is 5.150% and the par amount, or principal value, is 2050 interest rate. The second entry tells a similar story. The CUN30TB6X43. The settlement date is July 16, 2025. The maturity date is July 16, 2025. The beginning payback date is January 16, $25 million. So they borrowed another $25 million, but this time with interest at 5.555% to percent. And the par amount is the same, $25 million. So they borrowed another $25 million, but this time with interest at 5.555%. And the par amount is the same, $25 million. So they borrowed another $25 million, but this time with interest at 5.555% and the par amount is the same, $25 million. So they borrowed another $25 million, but this time with interest at 5.555% and the par amount is the same, $25 million. So this time with interest at 5.555% at the par 5.500% and the par amount is the same, $25 million. But this time with interest at 5.55%. Both of these bonds are considered optional principal redemption, meaning the bank can choose to pay them off early if they want. They are also classified as American, which means the bank can pay them off any time after a certain date. Both these bonds rate types are fixed constant, meaning that the interest rate stays the same over the life of the bond. No surprises there. The report also goes into a little bit more detail on what all descriptions mean. For instance, optional principal redemption means that the Federal Home Loan Bank of Dallas can pay off its debt early if it wants to. American call style means that the bonds can be paid off anytime after the first date they can be redeemed until the final payment is due. Constant rate subtype means that the fixed rates will stay the same over the life of the bond. They won't change. The report ends with a signature by Sue Cassidy, Vice President and Director of Financial Reporting, dated July 2, 2025. So what does all this tell us? The Federal Home Loan Bank of Dallas is taking on significant debt, $50 million to be exact. The bank's obligations are not backed or promised by the government. This means that the bank itself is responsible for ensuring these bonds are paid back. The interest rates, although aren't crazy, are still considerable. Is taking on so much debt so concerning? I think it depends, right? The bank thinks it can make more money than the interest it will pay out on these bonds and still be able to pay the bonds at their due date. But what if their bets go bad, or what if the interest is too high? Alright, that's our breakdown of this report by the Federal Home Loan Bank of Dallas. What's your take on these numbers and what they signal for the bank's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.